time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts, and here to take us through the trades, Charles Moon, Senior Market Strategist for Equities at Prosper Trading Academy. Thank you both for being with us. Let's take a look at one of the big stay-at-home plays, and that was DocuSign. It did so incredibly well, but of course it fell off a cliff in December, especially from that 314 August high. What are you thinking here, Charles?
Yeah, I mean, certainly a lot of, these overvalued plays got really punished here over the last month. And it's as if the market all of a sudden cared about valuation. So here we are with DOCU plummeting off of earnings. But what's really important here is that the market always likes to find stocks that find floors when they want to play on the buy side. And that's really what it looks like right now. They dropped down to 131.5 off of earnings. They've been holding above this level, and they're actually starting to hit a higher low reversal. Now, I tend to not be very contrarian versus short-term and longer-term trend. DOCU's been really in a downtrend since August when they hit that 315, all-time high. But ultimately, this is also finding value in a market that's thirsting for short-term opportunities, long-term value plays. And I believe that DOCU has potential to run back up here at 185s if they maintain above this 131 floor. To be more succinct, I think that 136 is going to be the more concentrated level for support. I do like the turnaround. I believe if they could get above that 165 level, we should start seeing that push towards 180. I don't think we'll go all the way up to that gap fill around that 230 price range, but ultimately, if we could get a stock that goes from 150 to 180 in the short-term period, that's always going to be a great value play, and that's what I'm looking at here in the near term.
Yeah. I understand what you're saying, a particularly short-term value play, especially if people are back at home or afraid to go back to the office, which already was an issue. They may do more and more from home. That could be a good thing for DocuSign. And as Charles was saying, Ben, he was noticing, right, as we see, the falling knife, but then it sort of found its footing here. Your thoughts, did it find the floor?
Hey, good morning, guys. Yeah, I was listening to that, and I've got my eye on some key levels as well. Similar levels that Charles has his eye on as well. But Nicole, you mentioned, again, they fell off a cliff, as you put it, and let's begin there in terms of some of the recent price activity, and then we can get a little bit into the bigger picture and see where some opportunity lies. But right now, again, really no rejection of these lower levels after, as you mentioned, they did fall off that 250, 240 area all the way down to 130. And, well, here's just a good look over the last couple weeks, and the 30-minute time frame really says it all. But take a step back from the 30 with me, and I just want to point out that it wasn't just that move. Here you can see this was the earnings-related sell-off, but this actually goes back to, that move that we saw off that 271 level. So this move here that we just zoomed in on is just part of that bigger picture weakness across the board. And this, as you can see, it doesn't even really tell it all, because the selling started up around that 314.70 level. And here you can see just the pressure they've been under. This goes all the way back to the beginning of September. We're talking about an hourly chart here. And look at this. Now, the percent change is what really stood out to me. At 314, that level that we just looked at, those highs from the end of August, beginning of September, they were up almost 40% there, Nicole. And take a look at this, Charles. Now they're down 31%. So quite the reversal, as Charles was talking about. Some of these stocks have gotten hammered, none as much so as DocuSign. Quick look here in terms of, again, the weekly or the daily time frame. You can see again that it continues to come off. We're back down to May levels. But yeah, this is a significant move lower. The one thing I think is that investors have to kind of hang their hat on is that we haven't really continued. We've mostly just been sideways. So there are two ways of looking at it. One is we haven't rejected this lower level, no V-bottom type pattern, nothing along those lines. But two, the price decay hasn't continued. So it's kind of a mixed picture here, I guess, in some ways. Investors want to see this thing back up to levels we were before we sold off, but they're happy that we haven't seen further decay.
And so, Charles, what do you think as you're looking at the levels that Ben's talking about here? The fact that you're not seeing the further decay, you do have the opportunity for some short-term value, as you were saying, in your trade in the near term. Tell us about your example trade here.
Yeah, so ideally, today it's actually triggering what's known as an inside bar. So consolidation period yesterday was within the previous day's range. That shows a short-term coiling effect. And most notably, as it started retracing, especially with the markets getting hammered lower, it was holding up exceptionally well. You would expect the stock that was extremely bearish off earnings to start breaking down and moving lower. We've seen it a lot. We've seen a lot in fintech names, especially names like UPST, and Affirm keeps cracking down and keeps making lower lows. So it's really interesting that the floor has been developed and they've been defending the floor, whoever, whether it's institutions or whether it's retail buying. And for me, once stocks find the floor, they go in two directions. They either go eastbound or northbound. They either go sideways or they go up. And, for me, this is a great shot to look for a great rebound play. The risk values in comparison to the reward values, it's uncomparable. And now I'm not suggesting, again, they're going to fully recover. The saying goes that all gaps get filled. I'm not so sure that's going to tie into this one. But we've also seen an uptick in some, stay-at-home plays, some, lockdown plays. We're definitely never going to lock down here unless something severely goes wrong with a COVID outbreak. But the stay-at-home plays are starting to find a little bit more aggressive buying, more institutional buying. There's a lot of value in names like Peloton and such. And if we see the overall broad sector, right, the names that are packaged with the stay-at-home start to get bullish, we're going to see a lot of buyers look at DOCU as an attractive play here. Again, it's pretty, it's not palatable to try and invest in the DOCU at the 300 range, but seeing down, at 130 to 150 obviously is a lot more attractive. And certainly people are anticipating that rise in these stocks. So, like I said, I just love the value in comparison to the reward here.
All right. It makes sense. I understand where you're coming from with that. Let's turn our attention to Roblox. There was a lot of fanfare when it came around as a new play, particularly for the teenagers that were into this gaming world. And in the last couple of months, it's had extremely heavy volume, with the trend down 20% for December. Charles, your thoughts?
Yeah, so Roblox actually has retraced back to, the gap low range right after their big jump off of earnings. And this is where I'm seeing the value and really high level buying coming in. Because the theory is that once we lose these gap bar lows, the idea is that Roblox is going to come back down and quite honestly look to fill that gap. So usually we'll see some preventive measures, we'll see support come into play. I really love it between this $94 and $90 price range. I believe that's a great value play. I feel that they're going to defend 90 extremely aggressively. And then there's a small little rebound play in terms of a price target upside on the gap up here around 107. I believe that the recovery could actually bring it up to around 115. Now, truth be told, I'm a huge fan of the metaverse, the idea of metaverse. I believe that's where a lot of growth is going to come in. Obviously, we had Facebook changing their name to Metaverse, but we've seen a lot of companies already surrounding and funneling, we're not talking about small amounts of money. We're talking about tens of millions of dollars into this metaverse play. Nike with their acquisition of an NFT company, Adidas already surrounding themselves and partnering with the NFT push. They're making a pretty strong announcement here on their Adidas Confirmed app next week regarding the metaverse play. So I just feel like the metaverse retraction is going to be extremely attractive as well. And if we're looking for growth opportunities in the markets, this is one that's really been untapped because a lot of people don't understand it yet, but people didn't understand crypto. People didn't understand Bitcoin when it was at 10, 20,000. And then of course, Bitcoin started running up, past 40, past 50, past 60 here. So, you can never, ever count out anything that's tied to crypto because of what I feel is a generation wealth that's been created here over the last year. People tend to be very attracted to things that have made them money. And that's why I could see a lot of interest really building over the longer term, especially in the near term as well, but over the long term in the metaverse play once people get a better understanding of what it is.
Yeah, well, 6 months ago, no one was even using the word metaverse, really. And now it's becoming very much more common. So I think you make a great point. Ben, your thoughts here on Roblox?
A couple great points there, Charles. And I have to agree with you in many ways. Unfortunately, some of the selling at this point has really yet to subside. So I'm still kind of taking a step back and a bit more of a watchful participant here. But Nicole, you mentioned some of the selling that we've seen throughout the month of December. Let's take a look at it. And Well, this isn't even the month of December. This is actually just the move lower that we've seen this week from the highs up around that 121, 122 area down to 92.35. You can see how we've regained composure here a bit. We're working our way back to that 100 level, but also on this chart, you can see these two separate phases of development. We talk about this all the time, the vertical phase, the horizontal phase, and how we're really just accepting price at these levels. So kind of in a range here, 102 to 92. And Charles was talking about that 94, 95 level. Here you can see again that we found support down there for the most part. And this is a look here, while it's not just the 5-minute time frame and the move lower that we've seen from 121. This is part of a bigger picture move from 126 that we've seen down. And another step back. Here's the hourly, guys. You can see that this was just, again, part of, well, here was that move that we just looked at in terms of 126 down. This selling, as Nicole mentioned, well, not just since the beginning of December. We're talking about this high of around 135, 136 was the end of November, beginning of December, but we actually topped out around 141. Now, I just quickly want to point out here that take a look at the daily time frame. This reminds me of what we were just talking about in terms of DocuSign, as far as what Charles said, and how it's difficult to buy into a stock like that when it's up around that $300 level. Ultimately, at these levels, a little bit more pleasing for your appetite. But ultimately here, another one that's pulled back significantly. So if you're looking to get into a stock after a strong run up like this here, this one's pulled back and is providing some opportunity to do just that. Right back to those highs that we saw back in May. If you remember, we oftentimes talk about that prior resistance becoming a new support. We'll see if that happens in this case.
All right, and last but not least, Unity Software. Charts are looking similar here. It goes really with what we've seen with technology for Unity Software. I mean, you could look at the NASDAQ snapping after 2 months of gains. This month is to the downside. This week is to the downside, and Unity is sort of in that same technology realm while it's pulling back. Tell me a little bit about this one, Charles.
Yeah, this is partly a meta play as well. And, again, the meta plays overall this month has been really knocked back. I actually expected, Unity to kind of pull back towards this 125, 120 level. That's really where I was anticipating that bounce. There was a lot of swing lows. It's been, historically defended. The 200 SMA is right at that 120 level on the daily chart. So I was expecting a lot of demand to come into play, a lot of short covering at that level. But today they hit those lows and immediately springboarded to the upside. They traded a little above 137 already. That was almost a $10 range so far. So we could see that there's immediate buy demand on these dips. Now, the question is, where is it going to settle? It's been in a pretty strong downtrend. Even today, they made a lower low. But it's getting to that range where we're looking and anticipating for that buyer demand to really come in and bring it on up. And that's where, again, I'm looking for value here. The peak here was at around 210. This was, late November. So we're already well off of that level, $100 off of that level in a month. Generally speaking, when stocks retrace back that fast, there's always a rebound play. And ideally, I was looking at that 125, 120 to be a demand zone for buyers to come in. Even if we could get 25, maybe even 40% returns, from that bounce back in terms of recovery, that's a $35, $40 run up that we could see here. I believe that they could come back right to that 155 level. If they recover above 155, it really opens it up, pushing towards that upper 100 range, 180, 190, maybe even $200 again. Also, a lot of this is going to be tied with maybe, potential catalysts need to come in, under Meta or Metaverse. It could be more institutions getting involved, whatever the case may be. It may be that the sector needs a catalyst, but ultimately I was looking for Unity to find that floor around 125, 120. As of right now, it's very bullish off the lows at 127 today, snapping back, almost trading at 137s right now.
All right. And Ben, what do you think about what Charles is looking at here as far as levels for Unity Software?
Well, most recently, the sell-off that we saw from 157 down to 127 is just a small snapshot or a piece of the bigger picture selling that's been coming into play. Here's the hourly from 210, you can see all the way down to 127. So it's been a tough month of December, and this really started since the middle of November, but we're starting to come off that low right now that we just recently posted. We'll see if we can build some momentum here to the upside. Quick look at the daily time frame shows the move from the May lows of this year and all the way up into that 210 level, the retracement from a 38%, 39% gain to back down 9% right now at current levels. Quick look at the weekly time frame shows if lower this week, it's 5 in a row. And well, we had Charles talking about that 200-day moving average still holding up above it here. And again, just kind of one of these stocks that's seen a significant pullback. If you thought this one was a little bit overdone and overpriced here, it's giving you an opportunity to get involved at a lower price point. Something to watch here, though, in terms of some of the selling. And again, that weekly time frame showing that it's really yet to slow as of yet, 5 in as many to the downside.
All right, a great big 3 today. Thank you, gentlemen, very, very much. Of course, Ben Lichtenstein every day who takes a look at these charts, does a great job there. And Charles Moon of Prosper Trading Academy. Great to see you both, and a good luck there at DocuSign, Roblox, and Unity Software. Thank you.